Price, and you are listening to the Blockchain Breakdown Podcast, where we cover the cryptocurrency industry, the blockchain technology, and the many innovative companies that are going to lead us in the next business revolution. Today we have an awesome show where we continue the series interviewing the founders and management of LendingCoin. We've got today the CEO, Sam Warren. Sam brings over 20 years of experience and accomplishments in the startup technology space. As founder and CEO, he's built over 2 companies from infancy to multi-million-dollar organizations. He's got a degree in marketing and communication, including an MBA in strategic management. So without further ado, I give you Sam Warren. All right, we are here with the CEO of the LendingCoin, Sam Warren. Sam, thanks for joining us.
Yeah, Anthony, I'm excited to be here. Thanks for having me.
Absolutely. We'll hop right into the questions. First one being, you've been a CEO for your last company for 18 years. What are some key factors in building a successful startup?
Yeah, you know what? I think that Jim Collins says it very well. He talks about really getting the right people on the bus and on the right seat of the bus. And the folks that we have on our team, we collectively have over 200 years experience in the technology, blockchain development, finance, and commercial real estate space. And so we really have a strong team, and it all starts there with your team. And not to mention that, you know, the blockchain technology that we are using is highly disruptive. So, you know, we feel like we do have the formula for success with, you know, starting with our team and then the product and the service that we are offering to both investors and the consumers out there that will be utilizing our services. So we're excited about the future ahead of us.
Absolutely. And you guys are basically building your platform off of the blockchain technology. How did you get into the blockchain and the crypto space?
My background, again, it comes from the technology space, and several of those years I ran a telecommunications company, and during that time I met, you know, one of my clients had the only Bitcoin ATM machine within 500 miles of Boise, and gosh, that's probably 6 years ago now, and he introduced me, and he just really encouraged me to look at, you know, Bitcoin and the other altcoins. I was probably your, you know, traditional or conventional skeptic, because as I looked at it, I'm like, man, there's really nothing that's backing, you know, Bitcoin, and it's not regulated. But as I dug into it, there were some things that were attractive to me, mainly that it had a fixed supply. There's only 21 million coins out there, and it had a great use case for transferring digital currency across the globe. You can do that within seconds. So that was really exciting to me. So I jumped into it. And to date, it's been one of my best investments. And certainly with the blockchain technology, it's proven to be disruptive to a lot of different industries, and certainly in the financial space, which we are heavily into.
Absolutely. Yeah, you're right. And you mentioned having, you know, physical assets backing the cryptocurrency being an issue. And so that leads me to my next question of how you use the blockchain for your real estate funding.
Yeah, so I guess the first thing is we have to understand what, you know, blockchain is. And just from a sheer definition, blockchain is a decentralized and distributed secure ledger that solves the trust and security problems when two parties exchange value. So I'll unpack that a little bit. So decentralized, so meaning no one entity or government owns the entire blockchain, right? And it's distributed, so it's distributed across the globe. Today, there's over 2.4 million servers that make up the blockchain. Secure in that to validate one transaction, it requires 306 independent servers to validate those. So as in today, when we make a purchase with our credit or debit card, there's only a couple of checks and balances. So we have the merchant services machine, right? When we run our debit card, the bank and the credit card company validate that to confirm that there's sufficient funds or sufficient credit. But again, with the blockchain, there's over 306 platforms that validate that. And those are not controlled by one entity. They're distributed across the globe. So it really guarantees just immutable transaction, meaning it cannot be changed. So that's blockchain for you. How does that help us on the financial side is, well, by utilizing blockchain, we can run much more efficiently. It cut out the middleman, so we can cut out any of the hidden fees that we typically see at closing, and we can offer interest rates because we're not regulated by any federal monies. We can offer interest rates that are unmatched by the majority of financial institutions around the globe.
As a private lender.
And it does eliminate the fraud and theft that we are seeing today. And that's a big issue because as humans, we are flawed, and some of the major lawsuits that we see out there today in the financial space is due to human error, human judgment, or just plain out theft. So by utilizing blockchain, we can cut all of that out, and it offers the most transparent financing that's ever been done. So we as the LendingCoin can provide that for the consumers today.
That's right. That's amazing, and it's a brand new technology looking to disrupt such an old industry. So what are some varying trends you have seen in real estate over the years?
Yeah, I mean, as you and I both know, that the real estate market has been quite cyclical. You know, we saw in the 80s where interest rates were very high, 17, 18%, and then obviously the pullback, the big crash in 2006. But we're somewhat protected over that because we're offering a true peer-to-peer lending platform. And what I mean by that is, as investors put money into our organization, we utilize those funds to specifically refinance commercial properties. And because we're not governed by and utilizing the Federal Reserve's money or any government money at that point, we can offer interest rates that are unmatched by the majority of institutions around the globe. And what's more is, as interest rates are climbing, and we are hearing that the Feds are going to be raising interest rates starting actually in September at 0.25% higher. Again, we don't know this until it happens, but as those rates do climb, it's actually advantageous for us, for TLC and the LendingCoin, because when people need to refinance their properties, they're going to turn to, an organization and a financial institution that can offer interest rates that are unmatched by, like I said, the majority of banks and financial institutions. And by utilizing the blockchain technology, it's a secure, immutable ledger. So as the interest rates are projected to climb, it will be a benefit to us because, again, we offer rates that most organizations can't match.
That's right. Me personally, I know it's a security token, but I almost look at it more like a real estate investment trust, or since it is a security token, I almost look at it more like a stock. It represents a portion of the value of the real estate investments that you own. Isn't that right?
Exactly. Yeah, it's a mortgage REIT, if you will. So, you're 100%.
Exactly. Yeah, that's just because I don't want people to get confused and think that the value of it is going to follow the value of a Bitcoin, like all the other altcoins that don't really have any value. My next question is how do you think technology and blockchain will affect commercial real estate?
Well, I mean, it's just like any technology out there. I mean, what does technology do for us as consumers? Well, we see it disrupting many, many spaces, and that holds true for the blockchain technology. Blockchain is being highly adopted by your major corporations today. We're seeing IBM, Microsoft, and even in the financial space, JP Morgan are getting into blockchain. So how does that affect the commercial real estate? Is it's a disruptor in the space. So take, for example, Blockbuster, right? They did not keep up with the trends and the technology, and so they were fully disrupted. So those financial institutions that do not follow suit and adopt new technologies will likely cease to exist because these new technologies, especially blockchain, is a major disruptor, specifically in the financial and real estate space.
Yeah, when you can improve on the speed, efficiency, trust, and transparency, then it doesn't make sense to not adopt these kind of technologies that can do that.
Exactly. Yep. Well said.
So once that becomes a little more widespread, how do you think the bank's role in financing will be affected by these changes?
Well, I think we're going to see a huge adoption rate, right? We're going to see a lot of companies adopting blockchain technology. And the reason being is just like any technology, it makes you more efficient and effective at what you do. And if you don't adopt, then you're going to be left behind. And, a lot of these banks, including JP Morgan, like I mentioned, they are adopting blockchain technology. They're not doing what we're doing. We're going to be the first to market, which is exciting for the investors and our shareholders because, as we know, being first to market typically reaps the greatest benefit.
And so, what's on the horizon for the LendingCoin?
Yeah, we've got a lot of major partnerships who we're in the midst of solidifying and are on track with refinancing commercial real estate. And as I mentioned, we're fully operational. So as we take investor funds, we're using those funds to refinance commercial property that are 50 to 70% loan to value. So really protecting the shareholders' investment. As I mentioned, our goal is really to improve on the conventional financing system. And by offering interest rates that are unmatched by any financial institution, or the majority of financial institutions, we can pass the savings on to the borrower, making it a win-win for both the borrower and the investor. Because the LendingCoin is backed by the number one asset around the globe, which is real estate, we believe we'll be one of the world's top cryptocurrencies.
That is so awesome. And watching the markets, being a crypto investor myself, the crypto markets are really tied just to investor confidence and investor speculation, whereas the LendingCoin's value is really tied to its investments, its real estate refinances and notes, and based on the increasing investments and profits you guys can make, that can seriously bolster your token's value.
Right. Yeah, no, we're fully, asset-backed security, which reduces the volatility. I mean, really, it gives us that book value, that floor that you don't see with the other cryptocurrencies out there. We're full security, so securitized token. So we're not going to be subject to the volatility that you do see with your traditional cryptocurrencies. We're plowing the way for security tokens today. And so we're really excited about our future ahead of us and just the opportunity to make a difference in the lending community and giving an investment opportunity for shareholders to invest in commercial real estate where they have liquidity and fractional ownership in the portfolio of assets that we hold.
That's right. That's right. So you guys just had your first payment over the blockchain after you guys refinance your first property, and we're very excited to watch you guys refinance more and continue growing. So I appreciate your time, Sam, and thank you very much.
Anthony, thanks again for having us and look forward to moving the needle forward.
I just want to thank everybody for tuning in to the Blockchain Breakdown podcast. That was Sam Warren, the CEO of the LendingCoin. Next week, we will be back with another episode, continuing to interview the founders and management of the LendingCoin. There's still a lot we have not yet covered, and I'm excited to dig deeper into the complex, innovative, cutting-edge business. So for the Blockchain Breakdown podcast, this is Anthony Price. See you next time.